We have some impressive news to get into in regards to Tesla stock and a lot of updates for our markets and Tesla, including some very bullish option activity in the 80+% range. But let's first acknowledge the elephant in the room. If you've ever watched a video of mine, the audio has never sounded like this before. It's what I think the most important thing out of any video is the audio. Because how can you stand to listen to poor audio? You cannot. I apologize. I forgot the mic hours away from home, and unfortunately there's nowhere around me now that I can go buy one. So hopefully it doesn't deter too many of you guys. Hopefully the information provided to you in this video is, well, overweighing the bad audio quality. But nonetheless, we still have work to do. There's still news. There's still things you need to know. So we're gonna go ahead and jump into it. But I do wanna say, first things first, congratulations to the trading community members that hit the FedEx puts with us. We had 50 put debit spreads. We paid $4 a piece, spent around $200, cashed out all 50 of them for $85 a piece. That was an almost $5,000 profit from a $200 trade. That would cover your costs for the trading community for about 15 years. So if you guys want to come trade with us, check out that link down below in the description of this video. But on with the video. So we have a couple different things that I want to point out that I think are very impressive pieces of news today for Tesla and our broader markets. This one is really impressive. Tesla stock is slated to see the highest net inflows from retail traders of any security in 2023. According to Vanda Research, Tesla will even eclipse the S&P 500 ETF, the SPY, which tracks the largest stock market index in the world and underscores Tesla's fast ascent to retail investor glory. Tesla wasn't even among the top 20 stocks that individual investors bought before data shows. This is very impressive, because think about it like this. During 2021 and 2020, when Tesla was doing very, very well, retail was really not involved too much in Tesla. A lot of that was institutional money, a lot of institutional big whales, if you will. Now that is completely flipped. It seems like about Q2 of 2022, when all hell started breaking loose in the markets, investors, retail, started plowing money into Tesla stock. What's going to happen when the whales come back into Tesla and see the light of day and see 2024 is going to be a fantastic year for Tesla? Well, they're going to be in for a world of hurt, just like Gary Black says today. I shared this post to our X account. Go ahead and give it a follow. It is Michael Tyler. But Gary Black 3 hours ago said Tesla shorts have to ignore overwhelming positive narratives. 1. Auto gross margins bottoming. Cybertruck halo effect. China's strength accelerating. $7,500 off invoice on Model Y on January 1st. Highland accelerates Model 3 growth. Cybertruck brand leverage to vans and smaller Cybertruck 2. Next gen $25,000 vehicle massively expands Tesla's total addressable market, or TAM. This is something now Gary Black, Dan Ives, Ron Barron, myself, and others are expecting to be announced in 2024. This is a literal game changer for Tesla stock. I know some things like FSD heading into China, that's big, could be a big deal for the bottom line of Tesla, but a $25,000 vehicle, ladies and gentlemen, if Tesla can achieve that with, let's say, 20% margins, 25% margins, maybe margins where we seen in 2021 and 2022, oh boy, you could see hundreds of dollars added to Tesla's valuation pretty quickly. And that's a catalyst we will have in what a lot of us expect the next 12 months. Don't forget about that one. That's a sleeping giant as far as value creation for Tesla stock and to send Tesla stock higher. Continues on with a bot slash AI gets discounted into valuation as it becomes useful. So basically saying we'll start adding more value to the Tesla bot and to AI. Think Dojo, think of, FSD, things of that nature. FSD level 4 and likely price reduction causes FSD take rates to soar. If FSD dropped to $10,000, take rates likely go higher. As rates fall, it also becomes cheaper to get FSD. So think about it like this even. If Tesla does not outright cut prices or raise prices, in which I think Tesla will in 2024, especially in the second half of 2024, we're gonna show you guys the probabilities for Fed policy. Even today, the odds of 7 rate cuts is going up quite a bit. I think that's a story we definitely need to talk about here in this video. But even if Tesla does not raise prices, well, adding things like full self-driving or getting that more expensive paint or things of that nature, different add-ons will become cheaper, less expensive to finance, even if the price of the vehicle does not really change. You might see greater adoption rates and more premium package services added on to Tesla vehicles, just as treasury yields are falling and then Fed funds rates. Now, he says declining interest rates boost long duration growth PEs most. And that's a big reason why I've been vouching for small mid-cap stocks and Tesla, interest rate sensitive names. I do not want to be in the broader indexes. I do not want to be in SPY, QQQ in 2024. If anything, if you're an index investor, IWM is the place to go. You could see 50% returns in 2024. That's according to Tom Lee, and I'm in pretty much agreement with that. I think Tesla could see over 100% return next year. I think Tesla stock could hit new all-time highs, pretty justifiably so. Tesla's trading at the cheapest valuation it's ever traded at today. And just imagine, as rates do come down, where maybe Tesla does $4.50 of EPS next year. That would put Tesla stock at $450. If Tesla does $5 of EPS next year at 100 times PE, that would put Tesla stock at $500 per share. Very easy to do these calculations if that multiple does expand from here, going from about 75 to 100. It's really not going to take that much to get an exponential rise in Tesla stock, and it looks like we're already on our way to seeing that if we look at Tesla's charts, in which we will in just a second. Gary Black does throw a bone to the shorts. He goes over their short thesis. Tesla cuts prices again. Very unlikely. Global EV adoption stalls. Very unlikely. FSD and autopilot regulation / litigation. That's probably the most realistic thing at this point. Tesla, or out of these other possibilities. Tesla brand has been damaged by Elon Musk's political views / behavior. Not a chance. X negative cash flow causes Elon to sell more Tesla shares. That's probably like a 5 to 10% probability. I wouldn't worry about it all too much. Tesla brings X under Tesla umbrella. I wouldn't worry about that too much as well. So there is, in my opinion, a zero short thesis for Tesla next year, besides the recession, which I'm intrigued to why he did not add that into the short thesis. That's the only short thesis I think there is for Tesla, or to be bearish on interest rate sensitive names, small mid-cap stocks. If you think a recession is coming next year, then those stocks will fall. Tesla will fall. Small mid-caps will fall. The broader markets will fall, especially as you're trading at all-time highs right now. You cannot afford to see a recession come about. Now, it's not just a recession you need to be watching for if you're cautious here, if you're in the recession camp. It's recession fears. It's actually just bad data you need to be watching, because long before you ever enter into a recession, markets price in a recession. That's why we were nowhere close to even in a official recession, but we were getting a lot of bad data in 2022. Around September, October, remember what happened to stocks? Stocks, well, crashed because markets were saying, hey, there's a strong chance we go into a recession in 2023. There was a 100% chance, according to Bloomberg, that we would see a recession in 2023 during that time. So stocks priced that in, stocks crashed. Well, that could be a big problem if that happens this time around. I'm not expecting that, but it is a possibility. The Fed, maybe they're saying something today. You know, I don't exactly know what Fed Harker means by this, but Fed Harker says today the economy is softening faster than the data suggests. Maybe that's why the Fed is opening their eyes, seeing the light of day and saying, hey, we need to cut rates 3 times. Maybe that's why the markets are saying, no, you're going to cut rates 6 times, if not 6 times, probably 7 times. By December of 2024, there is a 39.1% chance of 6 rate cuts next year. Now, the odds of 5 rate cuts are at 22.3%, and the odds of 7 rate cuts are at 27.1%. There is 8 Fed meetings in 2024. If you take out January, because it's pretty well known the Fed's not going to do anything January 31st, if we price in 7 rate cuts, that would be a rate cut at every Fed meeting after January in 2024. If you start to price in 8 rate cuts, which honestly, if you start to get just a couple bad data reports that could happen, you're going to be pricing in at least 150 basis point rate cut. At me could get pretty aggressive on the downside for interest rate policy. To some extent, this would be good for interest rate sensitive names, for names like Tesla, but you want to make sure we're not pricing in more rate cuts because of recession fears and the economy slowing down. That would not be good for stocks. Not all rate cuts are created equal. Usually stocks fall after the first Fed rate cut. That's because there's usually a problem. And the Fed's usually not conquering inflation and seeing a good economy when they're cutting rates. Usually the Fed is cutting rates because we're heading into a recession. But this time around, it doesn't seem like that. It seems like the soft landing is starting to play out. But we want to watch to see if the narrative does shift. If you are a viewer of this channel, if you watch all of these videos, I will keep you guys posted long before the narrative officially shifts. You will have a heads up, you will save a lot of money. That's why you want to subscribe to the channel and hit that like button. Carl from CNBC says solid growth, jobs aplenty, falling inflation, low recession odds. That, in 9 words, is the Axios macro consensus among the nearly 600 macro readers who answered our call. This was an article from Axios, so the narrative is pretty bullish out there. Toyota is recalling 1 million US vehicles over a sensor that may short circuit, which could result in airbags not deploying as designed. This is a physical recall, a lot different than the 2 million vehicles Tesla had to recall with an over-the-air update. But you'll find out, you'll see that financial media is not going to mention this at all. The Tesla Model Y is set to break a 37-year sales record in Denmark, set in 1986 by the Opel Kadett for the most cars sold in a calendar year. Ford was the most recalled automaker in 2023, while Tesla was one of the least, according to NHTSA data. Total recalls, including physical and over-the-air update recalls. You have Ford at 54, Chrysler at 45, BMW at 27, Mercedes at 27, BMW's 29, and confuse the two, GM at 22, Volkswagen 18, and Tesla at 13. Tesla's over-the-air update recalls in the US affected about 2.1 million vehicles. Tesla's total recalls affected just 21,455 vehicles, or 1% of the total. These are physical recalls where you have to take your vehicle to a servicing center. Tesla, in fact, had fewer recalls in the US this year than almost every other large automaker. The only automakers to have fewer recalls would be Volvo and Lucid. And holy guacamole, look at all of the Cybertrucks. We could count them here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22 Cybertrucks sitting outside of Giga Texas, and it looks like more are coming out the factory as we currently speak. In fact, we're looking at about 40 Cybertrucks in total, according to Joe Tetmeyer in Giga Texas parking lot just today. This is a little bit of bad news. Danish labor unions join Swedish strike against Tesla. Now, this is something I don't think we have to worry about all too much. I think this would be a bigger problem for the US, or if, China started striking. But this just is more of a headache than anything. Really, when it comes down to transporting these vehicles, that's where the biggest problem is arising. But again, I don't think this will materially affect Tesla, so I don't think it will materially affect Tesla's stock either. But it is definitely something to be watching for if this does spread into a larger strike event in Europe. Now, if we were to see like Germany start to strike, that would be a bigger problem. The $180,000 Mercedes Maybach EQS SUV has received an EPA range of up to 305 miles. Origin's partnering with Tesla to offer credit union financing to EV buyers through Tesla's website. This partnership will provide Tesla buyers seeking affordable monthly payments with more options through credit union financing. This is something I hope gets extended more and looked into more. Yes, Tesla buyers tend to be higher income earners anyways, but still, there's a lot of other companies out there like a Ford or Volkswagen or just other companies that offer 0% financing for 5 years or whatever the terminology is, or 2% financing, 3% financing that are really going way lower than where Tesla's numbers are. If we could see something like that, that would obviously be really good news. That would probably help increase Tesla's margins as well. You wouldn't see pressure to actually cut prices if the financing costs for vehicles were cheaper. Maybe Tesla could actually start to raise prices based on that alone. Panasonic on Wednesday said Oklahoma was no longer a candidate for a new electric vehicle battery plant in the United States. They say, quote, "This decision will not impact our operations in Nevada or Kansas." Ross Gerber is back, unfortunately causing me to lose more brain cells. He writes, "Tesla won't even let you configure a new Model Y, only selling inventory cars. Never seen that before and by no means is a good sign." Hashtag Tesla. Sawyer Merritt debunks this and says this is not true. In Tesla's website menu, you just click order under Model Y, which brings you directly to the custom configuration page. Tesla putting an explore inventory button on the homepage instead of order now is a common practice they've done at the end of quarters. And personally, I live in Michigan, so I've always just seen the explore inventory button. You actually have to like click on Model Y and go to the configuration, because obviously I'm pretty far from California, Fremont. I'm pretty far from Giga Texas. I'm in Michigan, about as far away as you could almost possibly get. So yeah, they like to sell their inventory more than they like to have you configure vehicles. And especially at the end of a quarter, it's a lot easier to deliver a vehicle in inventory than to configure a. It's just a way to try to help boost some sales. But Ross Gerber apparently just doesn't understand that, which doesn't make a whole lot of sense to me. Stellantis plans to launch a hydrogen fuel cell powered Ram pickup truck in the US by 2027. Automakers committed to the North American charging standard in 2022. 1. Automakers committed to the North American charging standard in 2023. 28. Thank you for joining our vision to improve charging experiences for all EV drivers. This is posted on the main Tesla account. The only major automaker that is still left yet to adopt this technology is Stellantis. And Stellantis, umbrella of different companies: Jeep, Ram, Chrysler, Dodge, Fiat, Maserati. Basically all the other major guys have already done this. In Europe, Tesla continues to be the fastest growing brand in year-to-date sales. Tesla was able to catch up to Citroën by 8.2 thousand units in November, still a 20.7 thousand unit difference. And here you can see Tesla is, let me find it here on the chart again, right here. So by no means is Tesla the top European car seller. There's still a whole lot of room to improve. Citroën, Fiat, Ford, Hyundai, Dacia. I don't even know what Dacia is. Pingent. I don't even know what that is either. Skoda. Don't have a clue what that is. All of these guys are selling more units than Tesla in Europe. I think that just shows you the amount of growth that is still in Europe for Tesla. It's massive. But Tesla's growth year to date is up 84% in Europe, much larger than any other automaker. Nuevo Leon's government named the Tesla district and outlined the highway's expansion. On a highway in the area where Mexico's Gigafactory will be built, workers began working. They carry out various deployments to prepare the entrance and exit of the Gigafactory plant. Tesla Energy keeps expanding. Acacia Energy announced that Brandel BESS, located in the suburbs of Brisbane, Australia, is currently in development with a capacity of 205 megawatt hours. The project will be supported by the Tesla Megapack system. Tesla's China uploaded a post promoting purchase benefits before the end of the year. The Model 3 Highland offers discounts of up to 16,352 won, insurance incentives, plus temporarily low interest rate policy. Tesla's new inventory numbers for the Model Y continuing to fall. This is a great sign. The Model 3 is upticking a little bit, as you can see here in pink. The Model S and the X continue to trend lower. Google Trend data indicates the Cybertruck is at 38 for search trend interest, higher than the Model 3 and the Model Y, so that still looks good. The Model Y is baselining and kind of trading sideways here. The Model 3 has been falling from 39 to 36, but still higher than the Model Y. So I would say these are solid numbers still, and really not the most important thing to be watching, but something I like to keep you guys updated on each and every single day. And Tesla continues to run about 300 different ads. FedEx, the trade in which we hit in the trading community, well, what they said was not exactly great. They said, quote, "In the remainder of fiscal 2024, we expect revenue will continue to be pressured by volatile macroeconomic conditions negatively affecting consumer demand for our services across our transportation companies," FedEx said in a filing. Its fiscal year ends on May 31st. So that was not very encouraging, considering this holiday spending season is the most important for any given year or time period of the year. This didn't exactly, comfort the markets. Just lower demand in general is not what we want to hear from the consumer. We also seen this news that came out yesterday. Only 60% of student loan borrowers made payments when bills restarted. That also doesn't sound great. So there are some negative arguments that you could make that the economy is maybe not doing so great, but I think the bullish arguments at this point outweigh the bearish arguments. We are going to have some data coming out tomorrow that we'll talk about more in the next video that I think is very important, that will highlight just this, that could give the markets a big move up or down. You need to be prepared for it. We'll talk about that more in the video that comes out at 8:30 p.m. later on tonight. Tesla's option activity has flipped. When I started filming this video, it was 86% positive. Now it's 14% positive. You have seen 521 orders totaling $814.22 million today. So hedge funds and institutions are a little bit on the defensive side, as they kind of have been for years now. They're hedging their positions in Tesla, just waiting for this recession, this big downside that I personally think is a flawed narrative when Tesla's still down 40%. I think if Tesla gets back into the mid 300s or all-time highs, maybe that's a better time to be hedging. But right now, I'm all in on Tesla. I have zero hedges on Tesla and actually looking to buy more shares of Tesla actually right now. So I'll keep you guys posted on any moves that I make in the trading community. If you guys want to join, link down below in the description of this video. But if you're looking at the entirety of the day today with retail, hedge funds, institutions, money managers, what they're doing in Tesla options, well, volume today is 58.63% to the call side, so a majority calls, and 41.37% to the put side. So I would say retail is a little bit more bullish than hedge funds and institutions, which shouldn't to the first thing we talked about in this video, where retail has been continuously buying Tesla stock. The short position in Tesla currently stands at $22.67 billion. and continues to rise. If we look at Tesla stock today, you're down about 0.6%. This is actually a little bit of good news. We want to see Tesla trade sideways for a period. We want to see the markets trade sideways as well. It doesn't exactly look like that has been happening recently. Although you're slightly negative today, you still hit a new all-time high today. The RSI is at 81.33 for the SPY, so don't be surprised if we do trade sideways or even slightly lower. We'll talk about Tesla's technicals a little bit more in the next video, but that major level to break out above is around 261, and I think that could happen this week if things go as I expect. If not, it's going to take a little bit longer to get that breakout to 300 and ultimately above 300, but the first step is breaking out above about $261. For any downside, your support levels likely to be around 253, 252. If you break under that, then your support level is going to be the short-term downtrending line of resistance, which should turn into support around 245. So I think your downside is quite limited here, whereas your upside, you got some big resistance levels, but if you break out above them, then you could see a monstrous rally, as there's a lot of cash on the sidelines looking to get reinvested heading into 2024, and Tesla looks like the best place to put your money. So that is going to do it for this video. Hit that like button and subscribe to the channel. Thank you for watching. My name is Michael Tyler. Enjoy the rest of your day, and I will see you in the next one.